The markets, yet another record high, but that would happen with the markets closing in a record high every previous day. So no surprise thereof, but yes, the intraday recovery is very interesting. What is a surprise to me though, is the way Bajaj Auto has reacted today. It is amongst the top losers today, because I thought from what the management commentary seemed to be on the call, that there could be some optimism around these numbers. It's down 2.5%. Good time, therefore, to get in Mr. Rakesh Sharma, Executive Director of Bajaj Auto, to talk about some of the finer points of the quarter and maybe the outlook, because I thought the outlook was, to my mind, Mr. Sharma, fairly buoyant given the current scheme of things. But let me first ask you, welcome you on the show. Thank you for joining in. And can I just ask you about what you felt about the pulls and pressures in the quarter? Because the belief is that the consumption or the consumer behavior is at best unpredictable, and it's worst if indeed the rural recovery doesn't shape up, then two-wheelers might have a spot of bother.
Good morning. In the previous quarter, at least the domestic motorcycle demand was really front-ended, because after many years, we saw this confluence of festive and marriage dates all occurring in the last week of March and the first half of April. So therefore, what happened was that demand got really front-loaded, and we had huge demand when you compared it very simplistically with previous April. And May and June expectedly were lower. But when we sift through the trends and do some analysis, we think that there is an underlying growth of about 6 to 8% in the industry, and much more driven by the top half, which is the 125cc plus segment, which is growing at double-digit rate. So those underlying trends seem to be intact as we step into quarter two, which is obviously, July and August are going to be low months, and then August a little bit of festive starts, but really the big quarter is going to be October, November, December. So, but the underlying trends definitely seem positive compared to last year, the same quarter.
Okay, which is good to know, and I'll get to those in just a moment. But can I get one question out of there on the margin front and the raw material cost inflation front? Because that is a fear in the minds. If there is a China revival, if indeed base metals move up, and I know those are very unpredictable, but your margins were much better than consensus. So I'm trying to understand, and you've mentioned that the raw material to sales ratio was also decent. So is it more an external factors led margin beat, or was it internal factors led? And how easy it is to predict what could happen in the next few quarters?
Yeah. So the margin story has been, this is the third quarter where we have delivered 20% plus EBITDA at the corporate level. And this is really the outcome of better realization emanating from better mix in almost each of the business units, and a very, very rock steady performance of about 100,000 of units in the quarter by the three-wheeler business. A tad improvement in the forex realization for a export business, which has grown a little bit. There was some cost pressure which we had passed on, but it was in the range of 1 to 2%. Going forward, also, the situation looks very similar. There are some commodities up, but there are some commodities which are down. One key factor over here for us is that what you see is a very blended margin, and you can imagine that we've got the components of this blend are the domestic motorcycles business, which I think is at a very steady pace. But then there is the electric business. 1 year back, our electric business was 2% of our domestic business. Now it's 14% of our domestic business. And of course, the electric business, two-wheeler electric business, is margin dilutive at a corporate level. So we've managed to deliver the 20% despite this rise from 2% to 14%. This 14% is set to grow further. But then there are, there has been supply chain work which has been ongoing. Costs have been consistently coming down, and we'll have to balance this off with the improving mix, Hopefully, the exports steady but small growth recovery, aided by the better forex realizations, will continue. So you can see there are these ups and downs which sort of offset each other, which lead us to believe that we are at this point of time, it seems to be in an equilibrium state. But then, there are disruptions which can occur anytime, which have to be then managed as and when.
No, but sir, so if disruptions or black swans notwithstanding, with the presumption that your EV numbers do go up, you still believe that after doing 3 quarters of northwards of 20, you can deliver another 3 of northwards of 20? Possible to predict?
Well, again, it's not that we start a quarter or a year with a target of doing 20%. Like I said, we are pursuing a maximization strategy for each business unit with an idea of the baseline profitability.
Okay.
But how, in the end, the blend of each of these business occurs, that determines the blended corporate margin. So I would say that we start with that, but if every business performs exactly the way it happened in quarter one, then I would say we are in a similar situation. But if suddenly we find that the domestic business, motorcycle business runs away with it, or there is the electric three-wheeler business sees a surge, it could be margin positive too. So, and vice versa. So it's difficult to, within a narrow band, beyond a narrow band, say that this is exactly what our corporate margin is going to be.
Yeah, no, understandable. I mean, 19.5 doesn't do too much of damage versus 20 per se. So, but just wanted to get that out of the way. Okay, now the bigger consumption piece, right? I think on your con call you mentioned that, or you mentioned to me right now as well, that 6 to 8% industry growth. Maybe 125cc grows faster. People believe you will grow much faster. You have the cheapest TV, you have CNG, you have 400, Bajaj 400, and multiple things out there, right? How do you expect your growth numbers domestic to be like if the industry is 6 to 8? Yes, it will be faster than that. How much faster, Mr. Sharma?
This type of question is it's very difficult to answer that for anyone. In the real world, nobody can say that, if the market grows at 8, I'm going to grow at 10.5%. It's not I can tell you what strategy we are pursuing.
Let's do that, sir.
There is a story out there, and I can tell you we will grow faster than the industry, because that is what has been occurring over the last few quarters. But beyond that, to pin it down to a digit, is, I think, an exercise in futility.
Okay, fair call. So let's talk about the strategy then, because that might give, and people can then make their own assumptions or their estimates.
Absolutely.
Please.
Absolutely. Well, so our strategy has been till now to focus on the 125cc plus segment, and where we are, 1 or 2 percentage points shy of achieving leadership. We have refreshed our flagship brand Pulsar completely. We've got something like 20 models out there serving each of these sub-segments in the 125 plus segment. And the capstone was the 400, which we just launched, which has again got to a very good reception. So these models are successful. They're being received well. So I think that is a growth platform which will continue to be driven. The two or three moves which we have made in the closing days of June are setting up some more growth platforms, things which will give us new business which can be scaled up. And the biggest one, of course, in that is the Freedom 125, which is the CNG, world's first CNG motorcycle. Now, with this, we are finally able to take a good shot at a very, very large segment where we have been underperforming, which is the 100 to 125cc segment. This is almost 750,000 units per month. And 70% of this is served by the CNG network in 335 towns. So which means that approximately 500,000 customers are out there who are mileage conscious. And our proposition to them with this is not just the 50% savings which the CNG bike will deliver, but a standout style, ergonomics, the reassurance of biofuel capability, which has all been extremely well received. I know that these are early adopters, but their reception has been euphoric. We have to see how the early majority, which is usually more sort of considered in deliberate in its evaluation, how they take to this, what the CNG filling experience is, and I'm hoping that the gas distribution companies will rise to this opportunity as well. So a lot depends on that. But then it is reasonable for us to entertain the thought that we have arrived at a defining moment in the motorcycle industry. And if that goes as per plan, then over the next, maybe not in quarter 2 itself, because we will just be placing the product, but going forward in quarter 3, quarter 4, and beyond, this could bring in significant volume increase to us in a segment which we have till now been underperforming on. Then when you put together the past success and optimism around the 125cc plus segment and the move with the Freedom 125, we are really, got the entire motorcycle industry in our crosshairs.
Got it. So I have one question, final question on that. And I'm not a biker, so I qualify this at the start by saying this, that I don't understand it as well, but based on what I've read thus far, there is optimism around this launch. The question though is that one, the queues, do they, I mean, I heard you mention that you hope the gas stations rise to the occasion. What if it is for them yet another product? Because a biker doesn't like to wait too much, right, in the queues. And outside our office, we have long queues for CNG filling. 2, I read in a note that it is a lot heavier than what an average 125cc is. Could that be a concern? I'm sure you've done your checks, but I'd love to know that answer. And lastly, if indeed this product, because you are launching, I believe, a higher variant and a lower variant as well in terms of power, does this help you negate the margin dilution that happens because of EVs as the EV share also moves up?
Well, that's a solid portfolio of questions, but let me just take it one by one. We are more than positive about the gas distribution companies rising to the challenge, and I'm not just, this is not just coming from within me. We have obviously been in touch with them, and they have been very, very supportive, I must say, because in the end, these companies are putting in huge amount of capex into building infrastructure, which is, pipelines and CNG pumping station. What they want is throughput, and the transport segment, which is buses and cars and three-wheelers, are a significant segment for them. Now, with the addition of this vast number of two-wheelers, they're very positive about it, because it is bringing new customers and it'll help them to pump more gas through their network and have a better utilization. And this was seen in the beginning with cars and three-wheelers also. These lines were separated, because the petrol pumps and these gas dispensing stations, they take note of the fact that these customers are coming and they need to serve them well. I have no doubt that they will respond to the rising numbers which start visiting their stations and provide more outlets. So I think there may be a lead and lag effect, but eventually, given the government's focus on this, I think we should see a better customer experience for two-wheelers as it goes along. When it comes to the second one, which you asked about the weight of the bike, in fact, we've got already 5,000 plus bookings. We had just opened it in Maharashtra and Gujarat, and now nationally. But most of these 5,000 plus bookings within less than a week have come from just these 2 or 3 states. We've got some 45,000 inquiries. Even our finance company has received 15,000 inquiries for loans. So there is and we are talking to some of these people, to the early people. There is, having a solid weight is actually being appreciated by a lot of people, because the traditional 100cc bike is a light bike, keep the bike light so it can give a nice fuel consumption number. But so I would say that is actually a compromise. That where you made the bike light, the tires very, very thin, and what happens? It means that the balance and the steadiness on our kind of roads gets compromised. That's a compromise because you want to keep the weight low to give better mileage. But here, because of CNG's ability to give much better mileage, that constraint is not there, and in fact, of course, the CNG cylinder also adds weight. The echo from the market is, wow, this is a solid bike. So I need not get worried about it. And it has presence. So the style is causing presence. So I would say that actually having a heavier bike in the kind of style which we have put is actually a positive for these people who are used to these tinny bikes because of some other reason. Sorry, the third one just escaped me. You had a third point.
You've kind of given the answer already, but what I just asked is that if the numbers pick up here, are they margin accretive?
Yeah. Well, right now, we are focused on scale. The numbers from a corporate point of view in quarter two would still be very, very small. And we are just looking at building scale. Its impact on the margins, etc., will start to happen much later.
Okay. I love the term teeny bikes though, Mr. Sharma. Thank you so much for the answer to somebody who's not a natural biker per se. Really helped. No. But thank you for the interview today and look forward to talk to you soon enough.